Output in units 1 lakh, actually is 90,000. Material units is 2 lakh, actually is 1 lakh 84,000. What is the standard rate? 12. What's our actual rate? 15 into 1 lakh 84. Once again, it is 5 lakh 50,000 is adverse. For 8,000 actual output, 6,000 divided with 10,000 into 8,000, 4,800 hours actual hour. Hello, my dear students. I am Dr. B.S. Subramania, called by name Dr. B.S.S., Professor in Commerce and Management, Vidhyaashram First Year College, a Temple of Excellence, MYSURU. In this session, I am going to hand Advanced Cost Accounting, third semester, Unit 4, Session 2, in favor of Standard Costing. In the last session, we already solved one problem. I have explained what do you mean by standard costing, difference between standard costing and budgetary control. A problem has been solved. Now, in this session, I am going to solve another two problems about some standard problems we are going to solve now. We'll move on. Problems and solution. In a factory, the budgeted and actual figure for material and labors are given below. Particular, budgeted, actual. Output in units 1 lakh, actually is 90,000. Material units is 2 lakh, actually is 1 lakh 84,000. Cost of material per unit 12 rupees, it is 15 rupees. Direct labor hour 50,000, 47,000 hours. Wage rate per hour 45 rupees per hour, 50 per hour. Here we require actually 4 items. Material variance, we require 4 items: standard quantity, actual quantity, standard rate, actual rate. Which are the 4 items? One, standard quantity, actual quantity, standard rate, actual rate. Here we do not have the standard quantity, but we know that in order to produce 1 lakh units, we have to put 2 lakh units standard quantity for actual output. What is the formula? Standard quantity for actual output. If you want to get the output of 1 lakh, how many units you have to put? 2 lakh for actual of 90,000. Standard quantity for actual output is, for 1 lakh units, material requires 2 lakh units. If you want to get 1 lakh, material requires 2 lakh units. For 90,000 of actual output, 2 lakh, 1 lakh into 90 is 1 lakh 80,000. This is your standard quantity. Your standard quantity becomes 1,80,000, and 1,84,000 is given. Then 12 rupees standard or budgeted is 12 rupees, actually is 15. This goes to material variance. So material variance, first we have to calculate material cost variance, material rate variance, material usage variance. We'll go. Material cost variance, MCV. Standard quantity into standard rate minus actual quantity into actual rate. What's your standard quantity? What we have calculated? 1,80,000 into 12. Your actually is 1,84,000 to 15. It works out 21,60,000. This is 27,60,000. So minus figure will come. So minus figure will be explained. It's called adverse. How much adverse? 6 lakh. Then MRV, material rate variance, standard rate minus actual rate into actual quantity. What is formula? Standard rate minus actual rate into actual quantity. What is the standard rate? 12. What's our actual rate? 15 into 1 lakh 84. Once again, it is 5 lakh 50,000 is adverse. Then material usage variance, standard quantity minus actual quantity into standard rate. What is your standard? 1,80,000. What is your actual? 1,84,000. Multiplied by 12, it is as per 48,000. Always MCV should be equal to MRV plus MUV. What's your MCV? 6 lakh adverse. What is your MRV? 5,52,000. adverse, plus what is your MUV? 48,000 adverse. So 6 lakh equal to 6 lakh equal. So MCV should be equal to MRV, MUV. Minus figure is called adverse, adverse, adverse. Then we'll go to labor cost. For 1 lakh units output, labor hour required is 50 hours. See that. For 1 lakh, we require 50 hours for actual of 90,000. For 1 lakh units, labor hour required is 50 hours for actual output of 90,000. So 50,000 divided 1 lakh into it is 45,000 hours standard hour. Actual hour given is 47,000. Standard rate is 45. Actual rate is 50. That is given. We'll move on. Labor cost variance. Standard hour into standard rate minus actual hour into actual rate. So 45,000 into 45 minus 47,000 into 50. It work out 20 lakh 25,000. This work out 23 lakh 50,000. Adverse balance of 3 lakh 25,000. Labor rate variance. Standard rate minus actual rate into actual labor. Your standard rate is 45. Your actual rate is 50. Multiplied by 4,700. It works out 2 lakh 35,000 adverse. Labor time variance. Standard time minus actual time into standard rate. Your standard time is 45 minus actual time is 47 multiplied by 45 adverse. So LCV should be equal to LRV plus labor time variance. Now we'll go to second problem. Calculate material and labor variances particular budgeted actual. Output in units 10,000. Actually is 8,000. Material cost 60,000. Actually 65,000. Material per unit 3 kgs. This is 3.25 kgs. Labor hour 6,000, 4,000. Labor cost 18,000, 10,000. We'll move on. We require standard hour, actual hour, standard rate, actual rate. For actual output of 10,000, labor 6,000 hours is required. For 8,000 actual output, 6,000 divided by 10,000 into 8,000, 4,800 hours actual hour. But actual hour given is 4,000 hour. Then come back to standard rate. Your cost is how much? 18,000 divided by 6,000 hours. It works out 3 rupees, rupees 3. Then come back here. 10,000 divided by 4,000 hours, rupees 2.5 per hour. We'll move on. Labor cost variance. First one I have done. Labor cost variance. Standard hour into standard rate minus actual hour into actual rate. What's your standard hour? 4,800 into 3 minus 4,000, 2.5, 10,000. It works out 4,400. Positive figure means favorable. Labor rate variance. Standard rate minus actual rate into actual hour. Your standard rate is 3 minus actual rate is 2.5 multiplied by 4,000. It is 2,000 favorable. Then labor time variance. Standard time minus actual time into standard rate. Your standard time is 4,800. Your actual time is 4,000 multiplied by 3. It is 2,400 favorable. So here 4,400 equal to 2,000 plus 2,400. Here LCV is equal to LRV plus labor time VV. What is your LCV? 4,400. What's your LRV? 2,000 plus 2,400 equal. Then material variance. Standard quantity for actual output. Here come back to problem. Material cost per unit standard is 3 kgs for actual output of 8,000. So 3 into 8,000 is 24,000. Actual quantity is 8,000 into 3.25. 26,000. Standard rate, 60,000 divided by 3 into 10, 30,000 works out 2 rupees. Actual rate, 65,000 divided by 8,000 into 3.25, it works 2.5. So, material cost variance, it is nothing but standard quantity into standard rate minus actual quantity into actual rate. 24,000 into 2 minus 26 into 2.5, an adverse balance of 17,000. Then material price variance, standard rate minus actual rate into actual quantity. Your standard rate is 2 minus your actual rate is 2.5. So 0.5 into 26,000, 13,000 adverse balance. Material usage variance, standard quantity minus actual quantity into standard rate. Your standard quantity is 24, actually is 26,000 multiplied by 2 adverse. So 13 plus 14, 17 equal to 7. This is 17. This is MCV should be equal to MPV plus MEV. See that 17,000, 13 plus 14 is 17,000. Here MCV is equal to MPV plus MUV. What is your NPV? 17,000. MPV 13,000 plus 4,000. 17,000 equal to 17,000 adverse. So MCV should be equal to MPV plus MUV. Hope you understand. We have solved about the two problems, standard problems you have done. When the standard quantity is not given, how to calculate standard quantity for actual output. Remember, standard quantity for actual output. I will repeat, standard quantity for actual output that we have to calculate. Then standard hour for actual output. Standard hour for actual output. Then we have to go. We require for material variance 4 items, standard quantity, standard rate, actual quantity, actual rate. Regarding the labor variance, we require standard hour, actual hour, standard rate, actual rate. All these 4 will be utilized for material and labor variance. Hope you understand this one. I have solved all types of problems. Definitely it will help you from examination. It will last for 10 marks. Okay, we'll meet in the next session with another session is going on called reconciliation statement. Till then, goodbye. Meet in the next session.